FTX Crash and the Future of Crypto. The year 2022 has not been kind to cryptocurrency. A sharp drop in Bitcoin prices, the failure of Terra Luna network, and new crypto tax regulations have added to the misery of investors and the industry as a whole. However, following the shocking FTX crash, the sudden market meltdowns became more intense. So, how to deal with it, and what future does cryptocurrency hold? Let's find out, and for more crypto updates, subscribe now. Here we begin! Binance announced the acquisition of FTX on November 9th, with the possibility of backing out later. Since then, FTT has lost nearly 80% of its value in a single week, reducing the total circulating value of tokens by nearly $308 million. In addition, prices have fallen, with the current value falling by 9% to $1.66. Following this, FTX tweeted on November 11th, expressing its concern about a bankruptcy filing. In response to this, Josh Peck, founder of True Code Capital, told Financial Express the FTT was outweighed by the token's declining value and the increased likelihood of total loss by continuing to hold it. Like the Terra Luna tokens earlier this year, FTT could become worthless in days. What is FTX? FTX is officially headquartered in the Bahamas but is managed from the United States with major offices in Chicago and Miami. It is a cryptocurrency exchange that allows users to buy and sell crypto assets. Cryptocurrencies all share the same basic structure as their star asset, Bitcoin, a publicly accessible blockchain that records ownership without controlling central authority. FTX is significant because, along with its competitor, Binance, it processes the vast majority of cryptocurrency trades worldwide. FTX and Binance are international cryptocurrency exchanges, the equivalent of an offshore casino. Each also has an arm's-length US regulated outlet that closely follows what little regulation the US government has. Still, the majority of the money that flows through their books is effectively unconstrained by regulatory requirements. What happened to FTX? It was speculated that the crypto industry news service caused the crisis. It claimed that the balance sheet of Alameda, a crypto hedge fund owned by FTX's founder Sam Bankman-Fried, contained billions of dollars in FTX's own cryptocurrency, FTT, and that it had been used as collateral in additional loans. If this is the case, a drop in the value of FTT could harm both businesses due to their shared ownership. However, FTT had no value beyond FTX's long-standing promise to buy any tokens for $22, raising concerns that the entire institution was built on sand. The slow burn crisis accelerated on Sunday when Binance's CEO Changpeng Zhao tweeted that his company was selling its FTT holdings worth $500 million due to recent revelations that have come to light. From there, things quickly escalated. FTT's value plummeted, and FTX customers began withdrawing funds in a bank-run style exodus. In the message to employees this week, Bankman-Fried said the firm experienced a giant withdrawal surge as users rushed to withdraw $6 billion or £5.1 billion in crypto tokens from FTX over 3 days. Bankman-Fried told his employees that daily withdrawals were typically in the tens of millions of dollars. Zhao then stepped in to save FTX, agreeing to buy the company on Tuesday but withdrawing from the deal on Wednesday. The issues are beyond our control or ability to assist, Binance said, citing findings during the due diligence process and the launch of regulatory investigations in the United States. What is next for FTX? To meet customers' withdrawal demands, the company must either find billions of dollars or find a way to reassure them that their money is safe. When so many customers rush for the door, that is always challenging. Bloomberg reported on Thursday that Bankman-Fried stated that the firm needed $4 billion to stay solvent, with an $8 billion funding gap. There are also deeper issues to discuss. For example, Bankman-Fried tweeted the day before the company agreed to sell Binance that FTX was fine and did not trade with customer assets. However, a message to investors from Sequoia Capital, a venture capital firm that invested $150 million in FTX, stated that the company was facing a liquidity crisis and solvency issues, implying that it owed more money than it actually had. The day after the sale failed, SBF reappeared and apologized for his mistakes. "I messed up twice," he wrote, launching a series of tweets in which he apologized for poor communication and said he had mistakenly assumed the exchange would not face a liquidity crisis, but argued that it was not insolvent. Bankman-fried apology only went so far, and users were left with questions, especially given other claims he was making simultaneously. According to the Wall Street Journal, FTX loaned $10 billion in customer funds to Alameda to gamble it, representing a sizable portion of the exchange's $16 billion in assets. What do we learn from FTX? Crypto exchanges are far riskier than traditional financial institutions and exchanges, where investors' and depositors' money is protected. In addition, because of the nature of cryptocurrencies, exchange users must transfer ownership of their holdings for their trade. This is why cryptocurrency investors should never keep their holdings in exchanges like Binance or Coinbase. Given the volatility of cryptocurrencies, when prices fall significantly, investors may sell quickly, leaving the exchange unable to satisfy liquidation demands from investors, potentially leaving users with a difficult claim on their crypto holdings. Secondly, FTX is not just bankrupt. It has sought Chapter 11 bankruptcy protection in the Delaware Bankruptcy Court, which favors reorganization intending to satisfy creditors' claims. The bankruptcy filing was preceded by a week of concern about the exchange's financial health and a surge in withdrawals that only exacerbated the situation. The final outcome is unknown. Also, the FTX incident could be another step toward the complete demise of these permissionless, privately issued cryptocurrencies. However, there was some hope in the last month that once the dark clouds of the horizon caused by the pandemic and the war in Ukraine lifted, crypto asset prices would rise. Now, there appears to be something more structural at work, revealing that given that, in the absence of full acceptance of cryptocurrencies, their price is solely determined by investors' willingness to hold them. However, there is some good news for FTX's demise. The discovery that cryptocurrencies may not be the golden hen for inexperienced investors is a positive development for markets. In market microstructure, these investors are known as irrational traders. They are typically exploited by more informed traders. Irrational traders have historically had a large impact on prices, which is undesirable for an efficient market to function. Once they are gone, we may have a market that prices crypto assets for their true worth. Where do we go from here? Several cryptocurrency exchanges are now actively verifying proof of reserves, but these proofs are only a snapshot in time. What would benefit investors if these reserves could be displayed in real time over some time? One of the reasons for the decline in the value of other cryptocurrencies is the increased uncertainty in determining whether the liabilities are and having interconnections with FTX. The realization that a decentralized form of currency would soon prevail and hegemony of the banking sector and the government was cryptocurrency's greatest strength. However, the recent theft of $370 million from FTX to another company, which is Alameda, has caused the world to reconsider the risks associated with investing in the crypto market. Over the years, cryptocurrency has established itself to achieve a more equitable financial system. Unfortunately, FTX could be the first of several stocks to take a hit for various reasons. The next few months will be turbulent, but only silver lining is that FTX was the only trading exchange. There is a lot of potential, but proper regulations are required to make it happen. So, what do you think about the case of the FTX crash and the future of cryptocurrency? Let us know in the comments below and subscribe for more.